Some of the world's biggest economies, notably the US, are slowing sharply. So can the global economy avoid another recession? Well, to get the latest diagnosis on the health of the global recovery, let's have a chat now with Leon Pereira of Spire Research and Consulting. Good morning, Leon. Thanks for joining us. Now, in the past 5 weeks, we have seen the unrelenting flood of negative economic data out of the US. Do you think there's a risk of a double-dip recession nearby?
Well, we don't think so. On balance, we think that the U.S. growth will come in at about 0 to 1% within that range in Q3 and Q4. So the U.S. will just about avoid a recession. I think the reasons for that are manifold right now. Unemployment is still extremely high at 9.5%. It's at levels that are really at close to historical highs for the U.S. in the entire post-war period. The trade deficit is widening. A lot of the demand that there is actually going to imported products. The housing market is very weak, with housing starts at a record low. And I think certain sectors are also facing specific issues. Oil and gas, for example. Oil and gas production was frozen due to the BP oil spill. In the healthcare sector, I think investment is facing some uncertainty because of uncertainty about whether the healthcare reform will continue on track after the midterm elections and so on. So basically a very weak picture for the U.S. economy, but we don't think that they will tip over into recession as such.
Well, as you mentioned, lots of things happening in the U.S. and later tonight, their second quarter GDP numbers are going to be out and is expected to be revised down from the initial 2.4%. What are your expectations?
Well, we expect that second quarter GDP growth figure to come in at about 1.5% or maybe a little bit lower than 1.5%. The main culprit here is the trade deficit. I think net exports should be going down. I think the problem that the U.S. faces there is that they export a lot of high value and high technology products to the European Union and Japan, and both of those regions are actually very weak at the moment.
Now, the U.S. government stimulus boost is fading. Do you think we need another further dose of fiscal stimulation?
I would say we do, actually. I mean, no doubt, the more fiscal stimulus there is, the more the U.S. is piling on long-term ill effects. But I think right now the growth concern and the deflation concern really outweighs everything else, and it's worth taking those risks and piling in with fresh fiscal stimulus. At the end of the day, if the economy is not kick-started, then government revenues will actually not come in from economic growth, from corporate taxes and so on, which is really what happened in the Clinton years, which is why you had strong growth and the fiscal deficit actually disappearing. Having said that, I don't think there is actually going to be fiscal stimulus for political reasons. The political complexion in the U.S. has changed. There are very strong voices calling for small government, for less fiscal spending. A lot of politicians in the Congress going into the midterms in November are not going to support a lot of fresh fiscal stimulus. And I think after November, it's really anyone's guess, but most likely you will face a much more recalcitrant Congress. So really, there should be, but it's probably not going to happen in a significant way.
So if that's the case, then, without government support, do you think the U.S. economy will contract in the third quarter?
Well, we don't think so. Even without government support, we would see just very weak growth, just barely escaping the bullet of recession, probably at 0 to 1%.
Okay, the benchmark 10-year Treasury yield is at the weakest level in 17 months. Leon, do you think the bond market is pointing to a double-dip recession, or are we facing just a bubble in the bond market?
Well, we don't think that there is a bubble in the bond market yet, which is not to say it may not become a bubble in the next few months. I think there is an element of sentiment as institutional investors are plowing into bonds away from more troubled asset classes like European equities, for example. But I think on the whole, the market is reacting to genuine fundamentals. I think there's more of a concern of deflation right now, and that's a justified concern. I think under those circumstances, there tends to be pressure downward on bond yields. Money tends to pour into bonds. So I don't think that's really a bubble.
Let's talk about the yen next over in Japan, where it's hit a 15-year high against the dollar and a 9-year high versus the euro. Do you think Japan's export-driven economy is in danger of another recession?
I think that there is a very real chance that there will be another recession, actually. That's a much greater danger than the same thing happening to the U.S. The Japanese economy is hit by a double whammy. On the one hand, you have exports. Exports are weak right now because global demand is weak, and most of Japan's growth, let's recall, has been powered by exports over the last 10 years. The other point is that the yen is extremely high, and that affects, in particular, I think, Japanese SMEs. The big Japanese companies, the Toyotas, Canons, and so on, I mean, they are not affected as much because they have restructured their supply chains. They have a lot of activities outside Japan. The SMEs, in Japan account for most of the employment, as they do in most countries, and they are much more affected by a high yen. And then on top of that all, I think you have a third very powerful factor, which is that consumer spending continues to be a little depressed. That's still the largest chunk of the economy, even though it hasn't been powering growth. Consumers are worried about the political situation. There were comments about the possibility of the sales tax increasing, made by the previous prime minister. So all that puts Japan in a very, very weak position, and it makes recession a real danger.
Well, what about Japanese officials? Are they likely to step in to try and intervene and weaken the yen?
Well, the responsibility for that would fall on the Bank of Japan, and there's obviously a lot of pressure now for the Bank of Japan to intervene. I don't think they will intervene in the short term, as in the next 1 or 2 months, most probably not in a substantial or significant way. They will probably wait to see the trend for Q3 GDP. Q1, I think, for GDP-wise, was a strong quarter for Japan, so I think the BOJ would want to see some evidence that the weakness is continuing into Q3 before they take any very substantial quantitative easing measures.
Now, Leon, these last few years, Asia has really been one of the stable boats in this rocky sea, and many have looked to China. Do you think they can still rely on China as the new engine of global growth?
Well, yes and no. I think at the global level, it's quite clear that the Chinese economy is still very small relative to the OECD, relative to the West. If you just look at hard currency GDP, China is still only roughly 15% of the combined GDP of the US and Europe. There's no way an economy of that size can actually tilt the world in a different direction from where the Western bloc is really going. I think for Asia, China can make more of an impact because it's a smaller pond in Asia. However, even in Asia, I think the outlook would vary by sector. In the commodity sector, I think China is tilting the entire Asian and global picture for energy, for example, for base metals. But if you look at other sectors such as manufactured products, electronics, textiles, or services sectors such as telecommunications, aviation, and so on, China in and of itself, I think, cannot really pull Asia in a different direction. And let's not forget that the Chinese economy will still be growing, but that growth will be slowing down as well. So the other economies need to do their part. Fortunately, I think in Asia, the big populous economies like India, Indonesia are all in pretty decent shape right now. So China is not the only game in town.
All right, so definitely a good time to be in Asia. Well, thanks a lot, Leon, for your insights. Leon Pereira of Spire Research and Consulting.
Thank you.